You know, I think the monetary policy, as strange as this might sound, is a little bit of, it's going to be on a transparent path, right? And the Fed has outlined what they want to do with regard to the bond tapering, right? That has been laid out very clearly. With regard to Fed rate hikes, they still have those 3 dots next year and a hike in December. So that's 4 hikes between now and the end of next year. The big question is, are they going to do all 4, or are they going to do 1 or 2 or 3? The over-under is probably 2.
And that's what the market's pricing in, right? It's 2?
The markets are pricing in just over 2 between now and the end of next year. Our best guess is that they hike in December, even though that's not even set in stone yet. I mean, Evans came out, he said, you know what, we should really let inflation run a little bit, get consumers confident that inflation's going to go up before we start hiking too much, which is really showing that the Fed's maybe getting some cold feet on the Fed rate hikes. But my best guess is there's going to be 2 hikes next year. If they hike 3 times, it means the economy's hot and the markets are hot. If they hike once, it probably means we've hit a speed bump on one of those measures.
And if they hike 3 times, what does that mean for markets? The market is hot, but how will the market react?
It means the market's hot. It means things are going well. It's good for your job. It's good for your income. It's good for housing. It's good for real estate. It's good for the markets. The problem is if they hike 3 times next year and continue to hike in 19. Remember, they have 3 hikes slated for next year and another 3 almost in 2019. We think that's way too much. We think 7 hikes between now and the end of 19 will really take away the punch bowl. And that'll cause the curve to flatten and probably the markets to sell off and maybe even cause a recession.